Hello, everyone. Welcome to another Fratarcangeli Friday Market Update. Here we are again, coming off of a very unique week. We had our president visit China last week and come away with a lot of positive things relative to trade, topics in regard to jumbo jets, as well as AI computer chips, some agreements there that we'll be selling chips to China. In addition to that, we have some agreements on agriculture. These are all good steps in the right direction. Also, supplying military or any type of help to Iran, China has agreed to cease. In addition to that, there were some talks about rare earth minerals. And so I think there's some positive momentum relevant to the relationship between the United States and China. I found it to be interesting that Trump brought a harem of individuals from our political groups as well as from our corporate leaders. I feel it's a step in the right direction. And more importantly, with the Iran conflict hitting ahead, Iran having their amount of supply hit limits that they cannot control any longer, and with China being the largest importer of oil from Iran, this is hitting its, I think, tip of an iceberg, so to speak, and this could be very close to the end. And comments made by our president yesterday, Wednesday, in regards to coming to a close end to this last stage with Iran, we're watching very closely. We saw oil prices pull back yesterday, roughly 5 to 6%. There's a lot of questions and concern as to how much longer this could last, as I do believe we're on a tipping point globally of the impact and the inflationary pressures we're going to be feeling greater than we already do if this goes much longer. We're watching very closely as we head into this holiday weekend. All eyes are peeled. On another note, we're coming off of earnings season. We're 90% reported on all earnings by the S&P 500. 84% of companies on the bottom line have beat their estimates, and 81% on the top line of revenues have been beat. This is pretty common. Roughly 75% of the time, we've seen this type of earnings beat relative to the guidance from companies and what they've delivered. So very positive there. I think it's no secret that technology and AI is the biggest driver of earnings growth. We're looking at year-over-year earnings growth through first quarter of 2026 at 27%. This ranks as the best earnings year-over-year that we've seen since 2021. So very positive in that regard. We also saw last week some key indicators relative to inflation. CPI and PPI come in substantially hotter than expected. This is a direct correlation to the impact to higher oil prices and gas prices at the pump, not only domestically, but globally. I don't need to reiterate the fact that so many different categories get affected. Logistics, not to mention mom and dad at the pump and corporations of the like. And we know that this is weighing heavily on the economy. As I mentioned, the tipping points. We're watching very closely, and we're watching the 10-year Treasury rate, which elevated to 4.7% earlier this week and last week. That is a very high number relative to the target range of between 4.3 and roughly 3.7% that we had anticipated for this year. A direct correlation to the inflationary pressure that the CPI numbers sort of led us to hitting those higher numbers. And it's all, I think, hanging on the Iran conflict that we're hoping comes to an end very soon. And we'll be watching that as closely as possible. We also know that Kevin Warsh will be sworn in yesterday, our new Fed chair. We had talked about the fact that the Fed was going to be lowering interest rates this year, as many times as 3 times and as little as once. Now there's heavy debate as to whether he's going to have to raise interest rates. This is very impactful to not only the stock market and the valuations that we hang so closely to the cost of money with the 10-year Treasury, but it affects everything we do, from mortgages to car loans to all the things that corporations deal with. So we're watching very closely. But I don't need to remind you, when this Iran conflict comes to an end, we're going to see a massive lowering of energy and oil prices and the Brent spot barrel cost as well. And that's going to be something that could alleviate this major concern. I think hopefully we're at closer to an end, but we'll be watching very closely on that front. I also know that we're dealing with a major explosion in tech and AI, and I believe that will continue to carry earnings growth throughout this year. But a number of things that we're watching very closely. And let me remind everyone, we are in an election year. We're in the second year of a first-term presidency as we're following this current new presidency for President Trump. And so these are very common to be times of volatility, times of uncertainty, and all the different reasons that we're experiencing uncertainty today, I look at over my 30-year career as being somewhat consistent. So we monitor this, but we don't react. We don't get emotional. We identify what our objectives are. We make sure that we have enough liquidity today, and we make sure that we're positioned for the long term. And we take advantage of the volatility that we've endured. We had a March market return that was one of the worst months of a typical year. And then we had a successful April when we saw the S&P 500 up close to 17% off the lows of March. And we're up currently close to 8% in the S&P 500 amongst all of this negative news. So we stay focused. We understand what our objectives are, and we take the emotion away. I wish you all a healthy, happy holiday weekend, and I look forward to seeing you soon. And I remind you that Fratarcangeli Wealth Management is motivated, ready, willing, and able to help guide and counsel you through these ever-changing environments. And I believe the best is yet to come. I'll see you soon.